It's 0.3 higher for the Nifty and the Sensex.
Definitely some amount of follow-on buying, at least for the frontline indices, similar to what we saw yesterday.
92 points on the Nifty. We are at 12,200. So looking very, very solid.
Once again, the power of short covering is visible with the way the index has rallied today.
Well, it's turned out to be a day where we are definitely seeing follow-on buying. So we have the Nifty, which is up around 95 odd points.
The Sensex and the Nifty end at 3-week highs after a strong showing all day today. Mid-caps, though, failed to hold on to gains. HUL and Nestle are some of the top Nifty gainers. PSU banks slipped the most.
HUL rallies 5% after Motilal Oswal remains bullish on the company, maintains a buy rating with a target of 24.90. The firm says it can see significant levers for HUL's earnings growth.
Bitter pill for Wockhardt and Sun Pharma Advanced Research. Wockhardt tanks over 6% after it sells its Buddy unit to Dr. Reddy's. Spark plummets 10% after it receives further queries from the US FDA for its chemotherapy drug.
Hindalco's third quarter numbers disappoint the street. Profits plummet 22%. City Union Bank also disappoints, reports highest quarterly slippage and slowest loan growth ever.
IT stocks rally in trade with the index closing with gains of 1%. The big three of Indian IT speak with CNBC-TV18 at the NASSCOM summit. And the message is that Indian companies, according to them, are leading a global digital transformation. Okay, those were the top 5 headlines from Dalal Street. Hello and welcome to a fresh new edition of Markets Today, the show where we tell you all that happened in those 6 hours of trading. We tell you what matters, what should be ignored, and of course prepare you for the day in front of us. I'm Prashant. With me today, my colleague Mangalam Malu. Hi, Mangalam.
Absolutely. Hi, Prashant. Good evening. A lot that is packed in this show today. We get your expert market opinion coming in from Saurabh Mukherjee of Marcellus Investment Managers. Wockhardt Group CEO Habil F. Khorakiwala elaborates on the rationale behind selling its Buddy unit to Dr. Reddy's. We also get you a word coming in from India's top tech leaders who have come together at the NASSCOM Technology and Leadership Forum 2020. But before all of that, Prashant, another day of gains and now at a 3-week high.
Another day of gains, but not very much new in terms of reasons why this market is rallying the way it is. So it's risk on. It's risk on worldwide. I mean, I think that is the long and short of it. Asia is higher, Europe is up, US ends higher. I mean, I think the cycle repeats. That's basically what we've seen now for the last couple of days. Generally speaking, for the last many days, there has been a sense that the new cases of confirmed infections of the coronavirus in China are reducing. I mean, Wednesday, for example, reports suggested that in China, some 1,650 new cases have been detected. That is about 30% less than the day before. Is the rate of the spread of the virus slowing down? That could be one indication. That could be one reason. I mean, the mainland markets in China are also higher. But remember, the incubation period for the virus, it could be anything between 15 to 24 days. So while people may be infected, it just doesn't show up before, those many days, 15 or 24. So we may discover many more cases, but at this stage, I mean, it looks like the rate of confirmed new infections is slowing down. That's one. Anecdotal evidence in terms of fund flow, and this is purely anecdotal, but it always is, also suggests that especially, the short-term money, the hedge fund variety of money, seems to be moving from China to other emerging markets. India is only a part of it. Could that be another reason? Possibly, but as I said, that is anecdotally what we pick up, what we talk to fund managers. So that's the flow part of it. There is also rotation. I mean, it's been private sector banks. It's been some other sector on some day. Today it was FMCG. So lever was supercharged, gaining about 5.5%. And there were a bunch of other like Godrej Consumer Products and others which participated very nicely. It came together as a nice FMCG rally, and it was basically the legs on which at least today's rally was built on. So, will this continue for the next couple of days before we move on to the next sector? It's been that way occasionally, and it might well follow through this time around as well. But I think, what I began with is the most important point. It's a global risk-on move, and we are seeing elements of that here in India as well. Let's, as always, identify what moved how much. Mangalam.
Absolutely. You started out with a risk-on mode. I will take off from where you ended. You spoke about FMCG, and FMCG it was. HUL had a record high. It wasn't just HUL. We had Asian Paints, Dabur, Trent, all of them continued to move to record highs itself. Dabur, of course, the street now believes that in the next Nifty revision, Dabur could be a certain inclusion. So that is why maybe some funds chasing there. Apart from that, we had Nestle, Pidilite, Avenue Supermarts, very close to their record highs, within about 2-3% from there. Nestle reports its numbers tomorrow. Then some other FMCG gainers as well. If you were a person who dyes or colors your hair, then Godrej Consumer is your pick. If you're a person who consumes alcohol, then United Spirits. And if not all of that, you consume Horlicks, then GSK Consumer. That one too was higher by 5%. But a couple of stray FMCG stocks were on the obverse side as well. Spencer's Retail, after very uninspiring numbers and a sharp rally from the start of this year, saw some money being taken off the table, 9% decline out there. VIP as well, insipid sort of numbers coming in. So while the consumption side of the market was doing exceptionally well, the investment side did not do too well, and which is what we saw in the way a couple of these capital goods stocks moved. BHEL, not good numbers coming in. That stock lower by 6%. Siemens, Tata Power not doing too well. And then we spoke about banks as well. Yes Bank, IndusInd Bank, State Bank of India, all of them lost in trade today. Some other laggards included the likes of Spark, or Sun Pharma's advanced research company, and that one ended lower on account of US FDA's queries for its chemotherapy drug. HEG, Graphite. HEG, of course, reported very, very bad numbers, and on the back of that, we saw some sell-off in Graphite India as well. And finally, Wockhardt, the stock was up 60% up until the deal was announced, and thereafter some money was taken off the table because of not just some profit booking, but also Habil Khorakiwala saying that they're not looking to repay any debt from the money that they've raised from this sale, and this will only help their liquidity going forward. So that is why perhaps the stock ended at the low point of the day.
All right, so that's basically a fair bit of specific stock action. We will dive deeper into some of these individual names and what happened in terms of stories in a bit from now. But some market opinion, as we always get you right at the top of the show. Saurabh Mukherjee of Marcellus Investment Managers essentially saying that he's bullish on the life insurance space. He's also talking about RBI's policy being courageous, and he's hopeful of an economic recovery going forward. Listen in.
The discussions I've had with lenders over the last 2-3 days suggest that there's a very high possibility the RBI policy will lead to a revival in credit dispersal. If that happens, given how difficult credit conditions have been in the last 5, 6, 7 months, I think we are looking at a fairly significant economic recovery over the next 12 months. And that has to bode well for not just stock markets, for the economy as a whole, for the country at large. So remarkably credit policy. Credit to the RBI for having the courage to do it. The two parts of the cyclical world where our governance concerns are a little bit muted are, say, some of the private sector banks which haven't yet seen the benefits of a potential recovery. So two names that are in some of our clients' portfolios come to mind: Axis Bank and DCB Bank amongst the smaller names. DCB Bank, especially well-run name, stock hasn't really baked in any sort of recovery. Axis still very much repair work still underway under the new CEO. I think there's a long growth runway for our life insurers. There are several out there who are well-run. We don't own any of them yet, but I think HDFC Life looks to us to be.
Okay, Saurabh Mukherjee there, some sort of opinion which is positive, saying could see meaningful economic recovery in the next 12 months. Well, we move on to the second headline of the day, and this is really the first and the second headline. FMCG major HUL rallied 5% after Motilal Oswal, the broker, retained its bullish stance on the company. The brokerage firm maintained a buy rating, and it's saying that HUL has got significant levers to kind of sustain the growth. Mangalam.
Absolutely. Nothing new that they're saying, just reinstating what the company has been done in the past and what basis that what it can do in the future as well. And the levers that you spoke about, there was a great wordplay out there. They say that, the next few levers for the company are one, over the last couple of quarters, we've seen mid-single digit sort of volume growth. So a favorable base in the next few quarters will aid their business. Also, demand recovery in the rural end of things after a favorable Rabi sowing season could help them as well. Synergies from GSK Consumer, that is a big trigger for the stock. Everyone's been talking about that. And over and above all of that, the company did indicate that they've taken some price hikes in the soaps vertical, and crude prices are still benign, so margins would do well for them as well. Motilal Oswal says that, the company's margins that have expanded by over 900 basis points over the last 10 years, we still haven't seen the best of them yet. 25% is what the company posted, and going forward, we will see better margins. And part of that could be on account of GSK Consumers acquisition as well, which they believe could add around 10% to their earnings per share estimates for FY21 and 22. Basis these triggers, they've also increased the target multiple, not just the target EPS, but also the EPS multiple to 50 times FY22 earnings. And with that, the calculation for the target price comes in at sub 2,500 rupees. And the stock is pretty close to that, around 10-12% away from that.
All right. This month it's up, 12% or so, 22.62 as of today's close. Mangalam, thanks very much for that. Well, the third headline today then, Wockhardt swallowed a bitter pill, tanking close to 7%. This after the company announced that it would sell its manufacturing unit in Baddi to Dr. Reddy's via a slump sale. There's been buzz about something like this for a while, but the stock reaction was a bit surprising. Ekta is here with more details in terms of the rationale behind the move and what this means for Wockhardt going forward. Ekta.
Well, yes, the big deal with regards to Wockhardt is done. They are going to be selling 62 of their domestic brands to Dr. Reddy's along with their Baddi manufacturing facility for 1850 crores. Now, a couple of key important points in terms of the valuations. They're largely in line with other deals which have taken place in the market. So, for example, Unichem and Torrent was at around 4 times sales. So, the street seems that thinks that the valuations of around 3.8 times FY20 estimated sales is fair. Now, a couple of important points to watch out for will be debt reduction for Wockhardt. They have mentioned a couple of priorities in terms of utilizing funds such as in R&D activities, biosimilar business in the US, but how much will go into strengthening their balance sheet will be an important point. For Dr. Reddy's, which is where India is around 17% of their total sales, this is expected to augment their portfolio. Remember that 9-month sales for this 62 brands were at 377 odd crores, but whether or not they will face any sort of execution challenges in terms of building up this portfolio will be important to watch. Remember, out of this total 62 brands, there are at least 3 brands which are in the top 300 brands in India, such as ZX, Bro ZX, which is for cough and cold, as well as an anti-allergy drug. So those will be important to build up Dr. Reddy's portfolio and will be taken positively.
Ekta, thanks a lot for that. In fact, that's not all. We also caught up with the Pharma Majors founder, chairman and group CEO, Habeel Khorakiwala, and he says that the proceeds from this sale will not be used to reduce debt, but they will induce growth. Listen in.
Our current debt overall is 2,200 crores. And as I said earlier, the debt payment would be as they are due over a period of time. The extra liquidity which we are creating is to build business in terms of faster growth, in terms of investment in research and development. I don't think we are planning for a debt reduction as a part of key activity of this divestment. Debt reduction will happen in normal course as it is due over a period of time. Whereas part of the portfolio will definitely be invested in a growth area.
Okay, Mr. Khorakiwala there. Ekta, stay on with us because we want to talk about Sun Pharma Advanced Research as well. The stock was down 10% after the company received additional questions from the US Drug Authority, US FDA, for its chemotherapy drug. There was an 8% cut. Ekta, why don't you take us through the details?
Well, thanks for that. Well, like you mentioned, Spark is in focus on account of a complete response letter, which is basically additional queries that they've received from the US FDA for one of their key drugs, which is under development, which is called Taclantis. Now, remember that this particular drug is basically a chemotherapy drug. Its market size in the US is quite significant. It stands at around $750 million at this point in time. So they had applied for a new drug application in 2019. They were waiting to hear from the US FDA by Feb 2020, which is when they would give a date or a reply to Spark in terms of where their application had reached. So they have received additional queries from the US FDA. What this means is that basically the potential approval for this drug is now pushed down the line, and if the street was expecting it to probably come this year, it's probably going to be later now, because they would have to respond to the queries, and one doesn't know the severity or the seriousness of the queries at this point in time.
Ikra, thanks a lot for that. With that, we slip into a short break, come back. We will, be back in a jiffy with all the other headlines that we're tracking this.
Welcome back. You're still with us here on Markets Today. Let's get through the rest of the headlines that we're tracking for you today. We got through 3, so here's the 4th headline of the day. Hindalco's third quarter numbers disappointed the street. The numbers came in the second half of the day. Profits fell 21.9% year-on-year, while the bottom line was impacted by a decline in its other income. Nigel is here with all of the details. Nigel.
Well, early this morning, Hindalco reacted to its Novelis numbers, which appeared more or less in line with what the street was working with. But what appeared a little bit disappointing was both the aluminium performance as well as the copper business in terms of the domestic performance. So let's run you through those numbers. If we're looking at the aluminium business, well, out there, the EBITDA number came at around 1,036 crores odd. The street was working with a number closer towards 1,100 crores odd. So that was roughly around a 5% miss in comparison to what the street was working with. And keep in mind, this alumina EBITDA number, it included savings of around 43 crores odd. Now, that was on account of, the changes related to renewable power obligations. So stripped of that, it would be a little bigger miss. So aluminium business did go down as a bit of a miss. In terms of the copper business, that as well did miss street estimates. So the street was working with a number of around 270 to around 280 crores odd. The number came in at around 256 crores odd. That's because the TCRC margins did see a sharp compression, and that was reflected in the numbers. So both aluminium as well as copper business, both of them in fact did miss street estimates by roughly around 4 to around 5% odd.
All right, Nigel, thanks a lot for that. Meanwhile, we also had City Union Bank disappointing the street with its third quarter numbers. In fact, the bank recorded its highest quarterly slippage ever. Loan growth too continued to decline. The stock fell about 1% in today's trading session on the back of this. And we have Abhishek with us with the fine print of the results. Abhishek.
Well, City Union Bank reported its worst ever quarter in terms of slippages as well as the loan growth. So slippages of formation of bad loans, that came in at 230 crore, perhaps the highest quarterly slippages seen over the last few years. Even the gross NPA ratio at 3.5% is perhaps the highest in last 8 quarters. The loan growth in this fiscal has not been too good, and if you look at the quarterly run rate of loan growth, that has been on a declining trend for last 3 quarters, and at 10.4%, the loan growth is perhaps the lowest in last 8 quarters. However, declining trend of net interest margin has been arrested as the credit deposit ratio improved by 400 to 500 basis point on a sequential basis. So the net interest margin came in at 3.96 when compared to about 3.91 in the previous quarter. Their operating efficiency actually deteriorated, so the cost to income ratio is now close to 46%, which is the highest in last 8 quarters. Against our poll, their NII was a bit of miss. However, due to lower tax rate, quarter on quarter at 15.4 when compared to nearly 19%, the PAT was slightly ahead of our poll. Let's hear out the management as to what they have to say about the results.
Okay, I think we don't have those sound bites right now. Abhishek, thanks very much for that. So that's City Union Bank analysis. There's more action from earnings that we are tracking for you. Both BHEL and Siemens reacted to numbers. Both reported weak third quarter results. We've got various brokerage firms who've downgraded their assessment for both these companies. ABB reported numbers today, and that has also reported a weak set for its fourth quarter. Anisha is here with a quick roundup. Anisha.
Well, yes, it was a weak day of trade for capital good companies. Siemens, for example, was coming under pressure after the weak brokerage commentary. Jefferies has maintained the underperform call on the stock, and they actually raised the question on the revenue visibility of the company. They say that the order inflow has declined by 4%, and that is why they are factoring in a weak outlook. They also raise a question on the capital allocation policy of the company. Remember, after the CNS Electric acquisition in the month of January, the stock price has been correcting, and that is something that is worrying the street. Apart from that, they also say that there's a downside risk to the revenue growth over the next 12 to 18 months. Moving on to BHEL, because that was also under pressure today. The numbers were very weak. The revenue actually declined by 22% and came in 2,000 crores lower than the street estimates. The profit consequently came in at 160 crores, and that compares with the estimates of around 200 crores that we had. Jefferies has actually cut the target price on the stock, and they say that the generation capex is likely to be muted, and hence they're factoring in a weak outlook. Kotak also says that 2020 is going to be perhaps another year of negative cash flow for the company. And they also say it is difficult to take a call on the medium-term outlook for the company, and that's why they've cut the target multiple. However, they've revised the rating to reduce versus sell earlier. Lastly and quickly, also talking about ABB India, because the numbers reported by the company were rather weak. The revenue is pretty much flattish, in fact down about 1%. The margins were the bigger disappointment because they declined by around 400 basis points. The profit, yes, is looking optically lower, down about 81%, but remember there was a one-off loss there of around 70 crores on account of impairment. Now, even if you strip off the one-time expense, the company's performance is rather weak because the profit from continuing operations have almost halved. Even if you look at the order inflow number, that has declined on a year-on-year basis and remains unenthusing. So all in all, a weak day of trade for all of these counters, down anywhere between 4 to 7%. Back to you.
Anisha, thanks a lot for that. With that, we move on to the fifth and the last headline for the day. It's the IT stocks that led the charge today, with the index closing with gains of almost 1%. Key gainers included the likes of Infosys and Wipro. Both of them closed about 1% in the green. Meanwhile, Shireen Bhan caught up with the top tech CEOs at the NASSCOM Technology and Leadership Forum 2020, where they say that Indian IT is spearheading the digital transformation.
The biggest shift has been that if you were to think about the big technology changes that happened over the last couple of decades, we were always on a catch-up mode. The start of the technology wave was typically much earlier before we brought up to it. Whereas over the last few years, if you take the elements of what we call as digital transformation, and even more so when we're coming at automation, we are the originators of this change.
We are at a stage where globally technologies become so relevant, and the critical mass that collectively India has, all of the companies here have, is just driving this change. So we are absolutely at the forefront of the change. And the good news really is there's so much new that's going on in what people are calling digital transformation, that's driving all of the change that we are putting in place. So really it's a hugely positive, optimistic view of the next 10 years.
I think we've got to break this idea of Indian companies versus global companies.
Yeah.
The reality is some of the global companies today have more people in India than some of us have here.
True.
Right? So the concept is not about whether you're global or Indian. The reality is we're all multinational companies.
Right.
The Indian companies began with Indian heritage, so they tend to have more Indian talent than some of the global companies. So I think that philosophy has completely changed. The other thing that's changed, it's not only technology companies that have a presence here. It's actually customers and then enterprises we were talking about earlier. I was talking with a customer earlier who's a large global bank, and they have more people here. They're building a talent base here, not for cost and quality, but for strategic differentiation. So they would tell you, don't walk our corridors of London and New York to get business. Walk our corridors of Hyderabad and Chennai and Mumbai and Pune.
Okay, that is as big as it gets in terms of representation of the Indian IT sector up on one stage. Well, it's a wrap from all of us here on this edition of Markets Today. Mangalam.
Absolutely. Thank you for tuning in. Stay tuned to CNBC TV18 for more programs.